What's up, YouTube? It's Todd Horst here with Tasty Tracker, and today I have another small account challenge update. Today I deposited $1,000, and instead of showing 1366 or whatever it was yesterday, it's less than that because I opened up the AMGN position. At this point in time, I'm basically trying to close these three positions for whatever I can get out of them. None of them are going to win on this expiration. QCOM could win on next expiration, but at this point it's trading around $400, which means that if I close it now, because it's a $5 wide, I'll be able to get $100 back out of it. So and then Plug and Tesla they're too far gone that they won't be able to win even if I roll them, probably. So and it would cost too much. So I'm really just looking to wipe the slate clean, start off fresh with just this AMGN position and around $1,000, $1,500, somewhere in that range. So on the last video, I got a question about how I choose my stocks and then how I choose my strikes. So I'll go over that here as quickly as I can. So first up is, I think the most practical way is for you to create a list of stocks that you're interested in and become as familiar with those as possible. I've traded all of these stocks many, many times on this list, so you can pause here if you're interested in looking at what I look at. But this is maybe 95% of what I trade. I do have ETFs and stuff like that in my stock holding, but as far as options are concerned, this is my list. I think this is most practical in order to build that relationship with the stock, so you can know what ranges and levels of support. And off the top of my head, I can list half of these what they're trading at currently anyway, because I check them that frequently. So I think it's in a bull market, if something like Coop is headed down, especially tech stuff, these past 2 months, I would rather not play them at all because they're going counter trend. SPY is still flat to up at this point. So I'm looking for things that are following the main market trend that would be going up. Obviously, if the general market's going down and these are going down, then that's still with the trend. And so then I would be interested in playing them. So this is my first tier where I'm looking at these for specific setups. I'm waiting until something is set up. I don't want to put a position on just because I have some money sitting around and I want to put a position on because I'm bored. Bored trading is when you lose money, and I'm guilty of that sometimes, but definitely you should wait for the setups to come to you in the tickers that you like. These are all market leaders, which means they're highly liquid, and I can generally count on them retaining their value for years to come. Dollar General has how many buildings around that, they're every other block, at least where I live. So they're worth a lot of money just inherently from that. So this is my first tier. I think people that use scanners are either very short-term traders, maybe, like a week or two, or day traders, because they're always looking for that fresh ticker they can get a quick in and out gain. So I typically don't use scanners, but if I do, my first stop there is Tasty Tracker has one built in. It's free for everybody to use. And the way I use that is I click filter, and then under filter options, I scroll down to the bottom here and select price. And then I hit add, and it will add this. And then I'll do between $50 and up, and then I'll hit apply. Actually hit ignore filtered first. And what that does is remove anything less than 50. I'm really interested in things that are more than 100, but I do keep ones over 50 because sometimes they do have interesting charts. So I'm going to come down here, look at SI. I'll view that chart. FUTU, HOV, and I'll just go down the list here to see if any of these look attractive. If I've exhausted this list and I still haven't found anything, but for some reason I'm hell-bent on putting a position, then I might go to Twitter or Discord to see what people are talking about and start looking at those charts. But generally speaking, again, I like my list. I wait for setups on that list, and then put positions on. And if no setups are present, then I move on with my life and wait until an opportunity comes up. So that's how I choose, or that's how I choose what tickers I want to chart. Then when I come over and chart, here I have an Apple chart, which I made some squiggles on. So I guess the first thing I try to establish is what the trend is. And so we have this support trend coming up here. It is below all the SMAs, which obviously isn't great, especially below the 20-day. And then it has this red downtrend here. So we are coming to a bit of a wedge here, but given the strength of this downtrend, it's very likely that this red trend here breaks. So then I can say, well, that's bearish. Maybe I want to put on a call credit spread, which would be a bearish position. Or maybe I'm thinking that because we've been consolidating here for, basically 2 months or so, maybe I want to do an iron condor and just collect on theta from it, basically going nowhere. If that's my assumption that it's going to stay flat. So yeah, I'm trying to identify the trend, what positions could potentially play nicely with that ticker. Obviously, each ticker is going to be different, but typically I like something that's pretty evident. So let's go over here to SI from the scanner. We can see this had a really nice trend on hugging up on the 20-day. At this point, it's not as nice as it looked for sure. MACDs and RSI are curling up on some nice screen volume today where we broke above the 20-day. So those are all positive things. Negative thing here is that it made a lower high here. Depending on how this plays out, it could easily come back down here and meet the 100-day. As it comes up here, we might see something like this and we intersect here at that point. But that remains to be seen. At this point in time over here, it's a clear bullish trend. And so, at this touch here, I'm looking to put on a position. Basically, when it comes up above here, that's confirmation that we're good. And so I'm going to put on a long position, long as in bullish, I should say. So a short put spread to play a bullish move off of this stock. So this is a very clear chart, like, oh yes, there's no question in my mind that this is going to go higher. Here, there is question in my mind, so I might choose to not play anything. But let's go back to Apple. Let's say I assume that it's going to go flat and I want to start pricing it out. And then I'm going to come over to Tastyworks. And so I drew two squiggles here. One is around the 110 area, an iron condor 110 to 125. So I would simply pull that up, 110, 125. And as far as the expiration, I'm looking for the next monthly that is greater than 45 days. So we have April here, that's only 17 days away. So I'm going to skip these weeklies and come back down here to this monthly, which is 52 days away. So that's the expiration I want. The only reason I would go further than that is if I have way too many positions on for my account size for May, then I'm going to go out further. To diversify on the expiration. Okay. But here I see that's 228 credit. And so then I'm going to say, well, that could work. That's a bit bearish in case it comes down. So if I want to be pretty neutral, then I'm going to go something more with 130, 115 kind of setup. And that's 242. So I can say, do I want 228, 242? Generally speaking, if you're collecting more, that's because there's more risk associated with that. And indeed here we are looking at the percentage in the money, and that's 40% and 26. So if I come back up to here, then it's a little bit more balanced with a 29 and a 36. That's why you're getting less credit. So I don't think there's any free lunch. You're getting paid more because it's riskier. So maybe you want to make it a hair wider. So we can do that. That's 187. That is still above the 160 that I like to collect. And again, maybe you want this to be a little bit more balanced, because this is 18% and this is 36. So we can go down here, and now they're 29 and 26%. So I find myself just playing with the strikes, seeing what credit is associated with that and how that lines up with the chart as far as support and resistance is concerned, and combine that with the percentage in the money. But they're really all painting the same stories, I think. Maybe the last thing you would want to consider is the volume or open interest. If you're trying to open up a position down here in the 90.85, there's barely anything there, whereas we can see there's a decent amount of volume here, and then we can tell right away from 13,000 versus 1,000 that people are generally expecting, this is the call side, people are generally expecting Apple to move up from here. So maybe you do want to slant more bullish if you believe that the other market participants are onto something. Okay, so I choose from the tickers I want to chart, then I chart those and try to determine the trends and levels of support and what positions could work. Then I come over and price those out to see if I can get relevant pricing. Again, that's above 160 for a $5 wide is what I'm personally looking for, but that's it's pretty flexible. I definitely will go obviously more, and then more conservative. For example, SPY is very tight as far as the bid and ask, and you usually can't get as much credit for a 5 wide, especially the further out you go. So let me go percentage of the money. Yeah. So you can see there, 40%. Normally I could get 160 for another ticker, but here I'm only getting $1.05 plus the $3.95 that would be required. So anyway, SPY is usually tighter, so I will accept less there. But the point is I'm generally looking for a premium that I'm satisfied with. And then I'm looking at what does my account need overall. If my account is very bullish and I'm expecting things to stay flat or potentially turn around, then I'm going to put on some bearish positions to help change my portfolio to have less of a tilt bullish, and to help hedge against my current positions. So yeah, I hope that explains the process. It's definitely not too complicated, especially when 90% of the time I'm playing the same tickers over and over again. And then I already have things charted, like these squiggles I just made, but these red lines I've had there forever. So, and then this green line. So those are existing lines that I've had for a while. So it doesn't really involve too much new charting, if that makes sense. But yeah, so that's the process. I pick the strikes based on support and resistance and percentage in the money. And then whatever premium I can collect for that, I determine if that's actually worth it. I don't want to compromise on my strikes just for the premium. So if the premium is $1.05 here and I'm like, no, that's not good enough, I'm going to come up here to get my 160. Well, that's now SPY needs to come up $2. And normally I have a cushion because I'm like 40% chance of it hitting. So I'm actually down here or something like that to get the $1.60. So yeah, I don't want to compromise my strikes just to collect more premium. I'd rather wait for a better position. Yeah, so hopefully that gives you some insight onto how I do it. Let's go over to AMGN specifically. So this is a cyclical stock. It's been in this mode the whole way back into April of last year. It's been in this channel. I don't think it was in there. Yeah. So that's when it entered this channel. You could sort of say even last December, but I'll go with April. And then it's just been bouncing up and down. It's in all the indexes, so it does have decent volume. At this point, we're nearing the upper band of the channel, and then the lower band, it could be seen as 215 or 210. It could also be seen up here at 220, depending on which you put more weight on. So basically, there are these frequently there are spikes up and then a downtrend, and then spikes up, and it did kind of hang around here, and then this long downtrend and spike up, downtrend. And so you know, I'm playing here that it's at the top end of its range, but it still has a little bit of room that it could go up. So what I've done here, let's just go over here actually. Then I come into Tastyworks, and I look at the percentage in the money. Again, I'm targeting 40%. And so here the 255, 260 could be okay. I actually went with the 260, 265 because I caught it at the beginning of the day today when it was, you know, up here in this range. So that is right there. And right now it's trading at 155. I of course got better than that. I got 154. I did not get better than that. So anyway, yeah, so it's 30% in the money, which is good. And then the 60-65 is at the very top of the band. And then up here is the ball risk-defined part of the spread. So as long as it stays below 260. Now, the idea here is that it's going to do something like this and come down. And then in this area, I want to sell the put side of this to create an iron condor. And obviously, I don't know how long that will take, but given that the MACD is turning down, the RSI is pretty overbought, and we are at the top of the range, these are all pointing to me that that this move is wearing off. Then you have earnings, which historically speaking are almost indifferent for this. You know, up here we did have a bounce, but not much. Over here we went down, over here we went down. So again, I'm more relying on this channel than I am worried about earnings. Doing Iron Condor will also be benefited by a IV crush if it goes through earnings. So yeah, so I'm looking to put on a put side here if and when that time comes, and then expiration is out here. So let's actually draw that. Okay. So we can say this gold line here, I want it to stay below, and then before this gold line. And so if I don't get an opportunity to sell the put side, that's fine. I collected enough. You know, 154 is within reason. Like I said, I like to get 160, so 154 is not too bad. But if it can come down here, I can sell the put side and collect more credit without putting up any additional collateral. And so I could potentially double that to, say, 300, and then I'm risking 200 to make potentially 300. And because it would be that a very wide iron condor, because I sold one spread at a time, then you know, I could walk away actually with the entire amount. That's the plan. Obviously, it can do whatever it wants to do and ruin my plans. But yeah, that's the plan, and that's how I charted AMGN. This is a fairly common stock that I play, especially if I want to put on an iron condor. I come to ETFs or AMGN. Those are that's just how I've always done it. So anyway, I'll leave it there, I guess. If you have any additional questions, let me know, and I'll talk to you next time. Thanks.